I'm going to try and make this video as unedited as possible. And the aim of this is to take you in your trading journey, wherever you may be, and try and build you into a system builder and try and get you to come away from trading just one or two pairs. Because ultimately, people will argue that pairs move, they all move differently. Yes, they do. However, when you are in a trend, trends is the basic fundamentals of market analysis. You get higher highs and higher lows. But however, if you limit yourself to just Euro USD or GBP JPY, for example, what if the pound or the yen is not trending? What if the real trend would have been in the Aussie Kiwi divergence or the Aussie Swiss franc, or in recent months, the Aussie yen? So in this video, I'm going to really take you through the charts now and get you into the mentality of creating your system and why I will try and favor and get you to believe in understanding and trading 28 pairs rather than just limiting yourself. So in this example here, we have the US dollar. This is not the US dollar index because that is 57.6% euro. Therefore, it's not equally weighted and you cannot get a true representation of what the dollar is doing right now. And that's what these charts give you. So if I was to trade on example for a 1 hour chart, then what am I going to look at? Well, I want to be in the trade for a long period of time because I want to maximize the profits and I want to reduce my risk. I want to make sure that everything lines up before I take that trade. Okay, so what are we looking at? Well, if we're trading on the 1 hour chart, then we're going to be looking at the 4 hour, we're going to be looking at the daily chart. So we're just going to go straight into it. So you might have to come back to this a few times. But what is this chart telling me? So this red line is the 50 period moving average, and the purple line is the 20 period moving average. The blue line here is the 13 EMA, we have the parabolic SAR, and we have the RSI. These are just this is the only indicators that I ever use. Sometimes I use the CCI if I need a trigger. However, with my strategies, it's simple, it's mechanical, and you'll be able to understand why very shortly. So US dollar here, this is the basket. Well, right now, what is it telling me? Well, it tells me that the basket, we're below the 50 period moving average. We're below the 20. The 20 started to slope down. We just had this large sell-off here. We almost created this kind of nice looking bear flag here, and we've just broken out. So really, the US dollar right now is just bearish. That's undeniable. And you can clearly see that when looking at the daily chart. Now, if you were to go back here, and if you were to see that it broke down from this support level here, now that is, how many days is that? That's 23 days. It's 23 days. So if you got into that trade on this day here, when you could see it was breaking resistance, for example, effectively as a swing trader, you could still be in that trade. You could be in a trade for months. So now we're going to look at, okay, let's just say we've come to the charts today and we clearly see nice impulse sell-off, bear flag, okay, continued sell-off, and we're getting this kind of doji candle here. So what do we see on the 4 hour? Well, we can clearly see the price again is rallied down. Okay, well, now we're creating a base. So the market moves in energy. You can't this can't happen all the time. You need to accumulate the energy, as you can see clearly here, up, down, after that sell-off here. And again, and then we can a further breakdown. So this is why the baskets are very important. Now, would I be looking for a short in the US dollar right here? Well, no, I wouldn't. So let's discuss why. Well, as you can clearly see here, so this was the last level of support, and you've also got this trend line here. So we'll draw that, for instance. You got this for here. So you can see that comes on all the charts. So a lot of people might trade a trend line break and retest. So in this instance, well, what does that mean? Well, each trade is going to be different, and you have to really learn your system and what you want to trade. But in this instance, what this aim is to show you that yes, right now I actually can trade the dollar short. Why? Because we have a -2, we're below the 20, we're below the 50, and the 20 is starting to slope down. That's a -2 daily trend out of a -3 score. If it was -3, these two would be sloping together around here. That would give you a -3. That would tell you that the US dollar is really dropping. And it is. You can see it's been dropping for a while, you know? So again, it's a -2. And then what does this give us? Well, this is telling me right here, well, we're creating this low base. We're below the 13 EMA, below the parabolic SAR. However, the RSI is starting to rise up. So what is it telling me? It's telling me that, momentum is currently not to the downside. However, it's building energy. And then again, if we go on the daily chart here, if we just remove these trend lines, so what would I wait for? Remember, this is the dollar basket, so I cannot trade this. But what I would be really waiting for is as a price to stabilize at a kind of key level. And then I would like to see it start to roll over. And as soon as I start to see it roll over, it's like, okay, I know that momentum is now shifted back to the bearish side, and I'll look for a trade. So this is one of the first things I would look at, and I would look at that for every single currency. So if we look at now the Japanese yen, what do we see? Well, the Japanese yen has been in this massive sell-off for months, and it's been by far the best short. Now, this price action is completely abnormal, and this is because of the Bank of Japan intervention. So right here, right now, we will absolutely be ignoring the Japanese yen because this happened in 2024, it happened before that, and the US, and what they do is they sell US dollar and they buy the Japanese yen, and you cause this massive flight. So if you see here, for example, this was just at the weekend or on Thursday. Thursday. You can see here, well, look at the normal price action. What's that? This is 1.28%. It's still quite a lot. You can clearly see this has been really volatile. And then look at this. It's a 3.27% move. It's massive. Therefore, right here, right now, you would absolutely be avoiding this Japanese yen, because I don't know, and many traders would say the same, is that, okay, what is this? Is this a high base? Are we rallied up? Are we creating this high base now here? Well, would I want to take this long? Well, the answer is, well, look, we've actually maintained the 50 here. We've maintained that on Friday close. So that's actually quite a strong indication. However, we've come up here a few times, and every time we've managed to get back up to the 50, well, what's happened? We've rolled over. So, you really have to see early next week of what's going to happen in the Japanese yen. Are we going to get this continued buying? That was a lot of energy for another further continuation to the upside. Anyway, more to the point, Japanese yen right now is off the cards. I wouldn't trade it. So I know that I've got the US dollar short, not yet, but coming up. So let's look at the euro. Okay, so the euro, what's the euro telling us here? Well, on a daily chart, well, we're below the 50, we're below the 20. That 20 is starting to slope down. Well, there was a support, they broke that. We're not really finding much support here. There was some support here, and we broke down. We haven't really got much. So you have to answer the question, where's the buyers going to step in? And right here, right now, well, the buyers aren't going to step in on the euro, at least not when you're losing technical analysis. And again, similar to the dollar, you've got this low base here. As soon as I get a nice close below this candle here, I'll take the euro short. You're below the parabolic SAR, the RSI is sloping down, the 13 EMA is sloping down. I mean, so where would I look for a great entry? Well, a good entry would be at kind of this level here, for example. As we know, support becomes resistance. If I can get a rally up here, you see it's got this kind of M top, whatever, double bottom that you want to call it. So would I want to take the euro short here? No. I'd probably wait for a nice pullback at this level. That's that golden ratio. If we get it or not, we'll see. But again, it's using the price action that you have in front of you. So in this example, if I was to come to the charts and I knew this, well, the last thing I'd be looking at is Euro USD. Like, why would you want to trade something that is both bearish right now? Look at this price action. It doesn't have a clear trend. And when something doesn't have a clear trend, the best thing you can do is preserve your capital. Now, you could say that right here, right now, and we'll go on to this in later stages, but right here, right now, well, what's stronger? So this, you ask yourself these questions when you find two weak currencies, for example, in this instance, the euro and the dollar. When you find two weak currencies, then you compare them next to each other. Well, and that's the, which one would you want to take long and which one would you want to take short? Well, right here, right now, I mean, it is a bit of a 50-50, I'll be honest. But you did get this really nice run up here. And let's have a look. We've pulled back to that 50% retracement mark, which is, we broke past this support here, support becomes resistance. So, and we're getting this kind of doji candle here, but obviously this was Friday close, so there wasn't a lot of volume. But the question is, are we going to hold this 50 line, and then is it going to come back up? Well, we have to wait and see, obviously. But right here, right now, my guess, based on this, even though it is in a bit of a downtrend, you can see that we had this nice rally up. We have broken that. I would actually look for a continuation to the long side here based on this impulse leg here. We broke a lot of resistance levels there. So, yeah, so then the question is, well, if I would take the euro long, then I would take the dollar short. But I wouldn't take this trade. So now let's go on to the pound. Well, the pound here, the pound, okay, it's been coming up. We're above the 50, but we're below the 20. I would just avoid the pound right now because there is absolutely no clear direction. Look at this 4-hour chart. There is no clear direction of what the pound is going to do. Look at the hourly chart. Avoid. Just move on. The Swiss franc. Okay, well, we're kind of breaking down here. We're consolidating. We got this nice rally up, sell off, and we're getting this 3-day bear rally. So the question is, look at this. As we know, there is your support. Support becomes resistance. And again, you cannot trade this chart. This is what I'm trying to emphasize here. But this is showing you collectively is exactly what the currency is doing in order to create high probability trades, which is what the whole game is in this. And also while doing that, being consistent in using your system, which effectively we're going into here. You might not think it, but we are making a system. We're saying, well, I'm below the 50, I'm below the 20. Okay, we are above the RSI, we are above the 13 EMA here, but are we going to break this 13 EMA and close below? As soon as we break this 13 EMA and close below, and the RSI is sloping down, then that would give me a -2 again. A -3 would be if the parabolic SAR was above the candle, because that's a bearish signal. So therefore, I'd be looking again for a sell-off and a bear rally to short into in the Swiss franc. So we've got the US dollar, we've got the euro, the yen we just ignore based on recent price action, the pound is going nowhere, and the Swiss franc is also a short. You want to be shorting into that. Fantastic. I've got all these shorts, but what do I want to pair it against? Well, we move on. Canadian dollar. Well, we're above the 20, above the 50. 50 is actually starting to slope up there, but the 20 is kind of flattened off with recent price action. We run up, consolidated. This was also to do with the Bank of Japan intervention. So it's the last few days have obviously been very difficult and different, compared to normal price action. But again, based on this, well, it's a +2, it's bearish. We're above the moving averages. So that tells me that the price today is above the average price in the last 50 days and the last 20 days. It's quite a bullish signal. And again, if we look at this, well, we're below the 13 EMA. The RSI is starting to slope up. But right now, right here, you could actually, in some scenarios, you can take these trades, because what you are expecting to do is you're expecting the higher time frame trend to continue. So some of the best trades that you will actually ever make is where you've got this great +3 or +2 trend on the daily chart, and you get this like -1 to 0 on the velocity. What that tells you is it tells you that the trend is going, but right now it's pulling back. It's pulling back. Momentum is coming away from it. The best time to get into the trade is when that momentum starts to pick up again, which in this scenario, you could argue we had this rally up here, and then we had this probably profit taken and sell off. We got this doji candle here, and now we're starting to see the buyers step back in here. So I would not be surprised if on Monday we see a further continuation to the Canadian dollar to the upside. So we know that is a bullish one right now. Potentially, obviously, we'll see how Monday opens and then look for a trade. Aussie. Well, Aussie has been on fire. Above the 50, above the 20. Now we have started to consolidate here. We are up at some yearly levels of resistance. So it's a very interesting one. However, if you look at this price action, this is the daily chart, rally up, pullback, rally up, base, rally up, consolidation, breakout. It's been, and these are days. This is days. So you could have been in this trade for a month if you got in at a good time, and you could have really made a lot of risk to reward purely based on this. There's some ways to decide, well, when do you get out of a trade? Well, for example, if I just want to use on this chart, if I want to go into the daily chart here, well, I can use maybe a 13 EMA here. Well, let's see why. Consolidation, breakout, pullback, and again continue. A trader might say in this example, because I know, is that I'm not going to get out of this trade until this 13 EMA is broken. You can see here this was a weekend, and the trader might have been out on this day. So again, using these indicators on a higher time frame, providing that you are trading with the trend, it can give you a really good risk to reward, and it allows you to build positions. So getting off topic here, we're on to the Australian dollar. So while Australian dollar is bullish, it's above the 50, above the 20. Okay, look at the 4-hour price action. Well, the 4-hour price action is it's consolidating. Now, why is it consolidating? Well, look at this massive run up. A huge run up, So, I mean, on the Australian dollar itself, it's a 3.5% move. It's massive. It needs time. The market moves in waves and energy. However, what does this tell us? Well, let's finish here. Let's go into the Kiwi. Kiwi right now, well, Kiwi has been in a downtrend. We got some RBNZ news came out saying they were looking to increase rates very soon down the line. We got this nice rally up. Now, we did get this consolidation here. Now, there's the question, is this consolidation going to hold? And we're going to continue up, or are we going to start to break down again? Well, if you look at these levels of support on this 4-hour chart, remember, these have been, this is Sunday night open, Monday for me. So these aren't always the best true values. But if you look at this kind of key level around here, let me just put a trend line on. If you look at that here, well, what does this tell us? Well, this tells us that we actually broke that support. Support becomes resistance. So in technical, we're actually below the 20, below the 50. This is actually something that, based on my system and based on my rules, I'd be looking to short. Even though I have the opinion that this is going to rally up, opinions aren't, you cannot track opinion. So all the technicals here are telling me it's a short. And this is, maybe you might understand now the logic of trading a system. What is the system telling me I can do? And the system you can use, again, in this instance, 50 period and 20 period moving averages on the daily. You can even reduce that time frame, and you can use it on the 1-hourly. You can repeat that. If you want to trade a 5-minute chart, for example, you might look at the 4-hour and the 1-hour. So you might say, well, what is it? Is the 4-hour? Well, I'm above the 13 EMA. Okay, so I can only go long. Okay, and then the 1-hour say, well, let's just say in this instance, well, out here, I'm below the, okay, this candle here, as around here, you see this? This is a good example. As of around here, we've been rallying up. Well, now it tells you that you can only go short because you're below the 13 EMA. So that is a right around here. Then the second rule that you might have, well, I can only go short if I'm below the 50 period moving average on the 1-hour chart. Okay, you waited for a little bit, you got that, rallied up. Okay, and now your trader, you can say, well, actually, I can only go short here. And based on the recent price action, I've had this impulse leg down, I've had this rally back up. Now I've got this consolidation period. Well, give it a more or less 10 candles. It's a rough rule. Unless you get that nice 3-candle pullback, which is the perfect. It's never like that in reality. If you're not getting the pullback and you're getting a consolidation, then what do you want in the consolidation? Well, you want the consolidation to be in a really nice tight range. It tells you the momentum is building within that range, and what ultimately happens is it leads to a large breakout. So for this instance, I would be using 10 candles. That's one of my rules. Is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Perfect. On this 9th candle, you could have had a sell stop here. A sell stop just below that base. This wick is not believable because this is midnight. But you got this really nice base. So where would my sell stop here? Well, my sell stop would have been just here, just below that candle. You could have had it. You could have had a stop further up. It's not working for some reason. You could have had a stop further up. You know why? Because you can't even trade this chart. So this is just a good example of um, when you can try and get into a trade. So again, we're going back to this. We're on the New Zealand dollar right now, but just using like a 5-minute entry model, for example. Well, again, below the 13 EMA, below the 50, okay, you can look for a trade on the New Zealand dollar short at this time. So again, now the question is, you go to your system and you go to say, well, what can I trade it long? I like the Kiwi short. What is the best long? So this is where I'm going to go into some examples, and I want you to try and think about these examples, because I know that some traders that I've worked with, they find it very hard. They say, well, so let's just do this. Well, we know that the US dollar right now is weak. We know that it is weak, but it's not something that we can be shorting into yet. We know that the Australian dollar is a good long, but we know it's nothing that can be traded right here, right now. However, if you find a good, like, look at this chart setup, for example. I mean, if you know that the currencies are weak and you know that the other currencies are strong, then that is your effectively hunting ground. Now, there might be better entries if you start to look into the nitty gritty of the baskets. For example, here is a really nice, this is the Aussie and the, so let's go on here, let's go on watermark ticker. So here's the Aussie and the dollar. Well, we had this really nice impulse leg. We had this kind of consolidation pattern, and then we had a further continuation to the upside. But this is an hour chart. This is a large move right here, right now. And actually, I would expect a further pullback in order for that to maintain. There's a lot of energy that's been expended here. Look at the 4-hour chart. That this is a 1.7%. It's a 120 pip move. The market it will struggle to continue to go up like that. So let me just go back on here. So for example, if we go on to here, well, it actually agrees with what I'm saying, because here we can see that we had this massive sell-off on the US dollar basket. We can clearly see that, well, what am I waiting for? As I mentioned before, I'm going to wait until I get kind of this level of resistance here. That'll give me a good opportunity. Aussie. Well, what am I waiting for to take the Aussie long? Well, again, the Aussie long is not really looking good here. However, what did we do? Well, right here, right now, we had this resistance level. You can see, because we're kind of pulling back here with again, just look at the price action. We're pulling back here. We've got this resistance. Well, okay. Well, we broke through that resistance. So what do I expect? I expect a pullback, and if this trend is going to hold, then the perfect conditions for this trend to hold would be a break, a pullback at that level, and then a break above this level. If I get a break above this level, Aussie dollar is confirmed. That is a confirmation that the Aussie dollar is a continued bullish trend, And also, yeah, I would want to take it, because look at the daily trend. Look, it's just a great long. If you look at it, the Aussie dollar on a weekly, I mean, look at the price action. But when you look back in time, I mean, we've got so much more to go. And that's why you cannot be scared. You cannot look at, oh, it's gone up too far, or it's too much. It's because if you keep maintaining that attitude throughout your trading career, whether it be any asset class that you trade, you're going to struggle, and you're going to struggle to stay in trades for an extended period of time in order to maximize your profits. So I hope that that example, particularly the Aussie and the dollar, was a good one, because we can clearly see, well, we know that we've got some really nice bearish currencies. We know that we've got some nice long currencies, or at least one and two, the CAD. You could even go on USD CAD, So again, it's telling us the same story. The baskets tell you the same story, but better. You can clearly see downtrend. Would I want to be shorting it here? No, absolutely not. What would I want to see? Well, I want to see this kind of level. I want to see this level at least get tested. And and also in an ideal world, I'd probably wait for a nice entry point at that 50 period moving average. A lot of traders, you have to also think about what are other people doing. Well, other people might, who's gonna short it here? No, some people will say, tell you what, I'll short it when it gets to the 50 period moving average. Because then they've got the average price over the last 50 days, 50 hours. As if you're trading an hourly chart, or you go to the one level below as soon as you start to see it kind of. So let's take this for example. As soon as you start to see it roll over, for example, one of the other techniques is using a 15-minute time frame and using a parabolic SAR. So you can clearly see here, well, we broke out that we know that we're in uptrend here, but we held that support. We rallied up, consolidation period. One of the entry models which I use is a break above a parabolic SAR, but that's probably for another video. So here almost aligned perfectly with where you would have gotten anyway. Sometimes it can take you too much. Also, if you want to trade on a 5-minute chart, this is a very good entry model as well. We had a nice 20 to 50 crossover. You got that nice break above a parabolic SAR. You could put a buy stop just on here, and you could put your stop either just below, or if it gets triggered, well, what do you know? Well, you know that this is resistance. You know that resistance becomes support. So therefore, you can really it might not make sense to you as a trader based on your information in the market, is that it might not make sense for you to put your stop right below here, because you know that if it breaks resistance, then resistance becomes support. So in this instance, you could have used this candles lower. You could have probably been more a bit safer, and you could go in around here, And again, you get this really nice continue to the upside. Again, you're on a 5-minute chart here, so you've always, when you're taking a trade, there's multiple things to remember. Is you've got time frame, entry, stop, and target. If you can't answer any of the questions, you shouldn't be in a trade. Everything has to be, pre-planned. Plan the trade and trade the plan. That's it. So remember that if there's anything to take away, time frame, how long do you want to hold the trade for? Okay, I want to be in the trade for a few days. If you want to be in the trade for a few days, widen your stop. Give it some wiggle room, because you might be looking for that 200-300 pip move. If you're in a trade for a couple of hours, you might just need a couple of hour candles. So you want to tighten up that stop, because you still want to get a good risk to reward. If you're trading a 15-minute chart, you might only be in the trade for a couple of 15-minute candles. You really have to. One of the biggest things I see in beginner traders, and I was also myself, is that when you get in a trade, as soon as it starts to run your way, you start to you change your plan. You want to multiply. You're like, oh well, if it gets to this level, I can make this much. And you keep thinking about the capital that you can make instead of what was the plan when you entered the trade. A couple of strategies, for an instance, is using ATRs. Well, okay, well, it's moved 2 ATRs on my time frame. Okay, well, when it gets to 2 ATR in profit, I'm going to tighten my stop up to 1 ATR. Maybe originally your stop was 2 ATR. So now at 2 ATR, you've made your 2 ATR. I hope that makes sense. So now you might say, well, I'm going to tighten my stop up to 1 ATR and I'm going to trail it. Now, obviously, if you're doing that on a 15-minute chart, then you've got a lot of volatility on a 15-minute chart, which can be good and it can work in your favor, providing that you get in at the right time. And you can only really get in at the right time if you're using, buy stops or sell stops, because in these instances, you are primarily trading breakouts, breakouts of like a high base, for example. So yeah, you have to remember that time frame, entry, stop, and target, and really trade the plan and plan the trade, and that's it. Any questions, just hopefully drop a subscribe. I'll try and do more of these, so you really get an understanding, and yeah, understanding why the baskets are so important and how they can benefit your trading, especially when looking at key levels and consistency. So I hope that helps, and get in touch if you need any questions.